you everybody for coming. Thank you, Ming, and everyone for the invitation. I'm Michael Conn. I'm CEO of Ether Capital. We're the first publicly traded business with a pure focus on the Ethereum ecosystem. We're looking to be the bridge between the financial industry and Ether, and that's what we did. So we raised about $50 million, did a reverse takeover of a shell here in Vancouver, and now we're publicly traded on the NEO exchange here in Canada. So before I get into industry trends and research, I want to give you an example, a story of one token that we've seen that's being pitched to us, because right now we're looking for investments. So this is a marine archaeology token. You will invest and acquire the tokens, and you'll eventually fund treasure hunts around the world. And if they can find a boat full of gold at the bottom of some ocean, then you can get that gold and you will theoretically be paid back. To me, that's indicative of a lot of what's going on. I think 95% plus of the ICOs and everything else happening out there are either going to be failed or are outright scams by bad actors. So I think this is something that's driving a lot of the decisions around regulation and even other ways to raise capital. So I think that's going to be something to reflect on as we go forward. So in 2017, you had over $5 billion of capital raised through ICOs. Already in 2018, you're already over $10 billion. And that includes Block 1's EOS fundraise for $4 billion and excludes the $1.7 billion that Telegram raised in a private fundraise. And really the line between ICOs and equity raises, token raises, is being blurred right now. And this is largely due to regulation. Everybody's so concerned about being deemed a security token. Everyone's so concerned about not passing the Howey test in the US that they're trying to figure out ways around it, and they're also trying to figure out how to be more investor friendly. So when you look at the regulators in the US, and I think this is also indicative of kind of what's happening globally, you have the CFTC, which views tokens as commodities. You have the SEC, which views them as securities, and then you have the IRS that views them as property. And I think until you have a globally harmonized regulation regime, you're not going to have innovation globally. You'll have pockets of innovation in Asia, pockets of innovation in Europe, and then ones in the US and to a degree Canada of trying to figure out ways to work through that security chain. So right now you see a lot of, rather than ICOs, and you still see ICOs, but you see a lot of fundraisers as SAFs, or there's another procedure now in the US where you can do a Reg D filing, effectively raising capital from accredited investors, then you do a Reg A plus filing to go public, and then you could be traded globally for accredited and non-accredited investors. So there's people are trying to figure out ways around being deemed a security token or getting into trouble around that. If you look at VCs today, traditionally VCs had acquired equity, and that's where they had been investing primarily. But you see a trend now of VCs now beginning to become more and more involved and interested in tokens. What's the reason? If you look at a VC fund, it can take 7, 10 years plus to monetize an investment. But with tokens, you create an investment that automatically, in many cases after 1 year or two, becomes liquid. So that's something to keep in mind, and you're going to see this trend moving over time, and that's why you see a lot of tokenization events happening. You see a lot of different innovative ways that people are investing. If you look at right now where an everyday investor can invest in the crypto space, they can mine, they can acquire the individual tokens or the individual crypto assets. But over the last year, you had over 200 plus crypto hedge funds pop up. And this is another way that investors broadly can diversify their investments into the space. There are lots of interesting deals coming up: stable coins, predictive markets, payment solutions, supply chain. You have a number of these that are coming to bat, and these are ways that you can have access in a more diversified manner as opposed to picking and choosing your spots. And so despite the regulation, you still have some businesses that actually want to be security tokens. So for example, if you look at certain assets, illiquid assets such as real estate, if you create a security token around real estate, you can actually take that illiquid asset and then make it liquid, because then the tokens can be traded, they can be shared, etc., and you've taken illiquid assets and have made them liquid. So not everybody thinks that security tokens are evil. It's just a way of kind of how do you look at it and what you're using it for. So what you see happening now is there are 2017 players like Coinbase, others such as that have been quite successful in their initial fundraise and build out. And what you see that happening now is Circle as well. You see those businesses now turning around and becoming acquirers themselves. So Coinbase, which was valued at 1 to 200 million during their initial fundraise, acquired Earn and is now worth over 8 billion. You have Circle, which acquired Polynex, and then you have funds such as Hubio that raised $1 billion fund for investments, as well as Binance that's looking to make investments of their own. So if you look at broadly kind of what's happening outside of this space, people living in the community, you have businesses that are traditional businesses such as the JP Morgans of the world, the BMOs of the world, et cetera, and they're trying to get involved in this. And so they've joined the Ethereum Alliance. They've joined other ways of trying to get a seat at the table. The problem here is, there's twofold. You have an ability to decentralize things through the platform. If you look at Ethereum, to a lesser degree, EOS and other platforms, the idea here is you're disintermediating the big players by creating an opportunity to decentralize. And what's happening with a lot of these players is they're trying to take problems that they have and try to force them down onto the blockchain. And I don't think that's where the success is going to come from. You're going to see a success kind of germinating from the blockchain up. That said, the Ethereum Alliance is there. You have them trying to figure out whether it's private chain or public chain, how to enact solutions to their issues. And at the same time, you see kind of a lot of avid development happening in multiple ways on the Ethereum platform. Right now, it's probably the most developed. There's 95% plus of the dApps that are involved there, the decentralized apps, and you have 900 plus apps that are already there. So, but you'll see, EOS is rolling out very soon, Tezos, within Asia, and Neo and Nem have their own ability to be successful. And I don't think there's going to be one company that's going to win. We're called Ether Capital, but if Neo goes off, we'll change our name, we'll be Neo Capital. We're pragmatic, we're not dogmatic. So we'll go where the opportunity is. But right now, the only platform that's really been tested is Ethereum. So where are we, and should we think about where we've been? ICOs will continue to be a source of funding, but in 2018, I think you'll see more and more equity participation and token participation. You're going to see VCs that are going to be looking at monetizing illiquid assets in ways that they haven't done before. Hopefully we'll have a more harmonized regulation regime. At the end of the day, I think Eddie said it best, with regulation, it can either clamp down on innovation or help foster it. And I think what we really want to see is a regulatory regime that protects the people that want to be protected or need to be protected from the bad actors, but at the same time foster innovation, and that should be fostered globally. And then, ultimately, I think you're going to see wider adaptation of blockchain technology across different industries and across different businesses. And that's only going to be good. Success begets success. And at the end of the day, we want the blockchain to be successful on a global basis. So thank you. I appreciate you taking the time to sit here, and hope I didn't bore you too much.
Thank you, Michael.